Good afternoon, welcome to GrainTV. My name is Cody. Today is Friday the 22nd for the weekly wrap-up. Let's turn over to the grain hedge trading platform and see where we closed off the day. Corn trading down 4 3/4 cents, soybeans down 14.5 cents, and wheat in Chicago here down 7 1/4 cents on the day. Let's talk a little bit about commitment of traders. That was out today. We saw an increase in net short positions in both soybeans and corn. Soybeans increased their net shorts by 47,000 contracts, now sitting at 81,000 contracts short. We see corn increase their short positions here by 20,000 contracts, now at 176,000 contracts short. But wheat was able to shrink their overall net short position here by 20,000 contracts, now at 84,633 contracts short for wheat. Basically, that is the definition of a short covering rally. This week, wheat was kind of hanging right in there, right around that 100-day moving average. Today, it tried to make a run at the highs that it printed early on in the week, unable to get above that, ended up closing a little bit negative on the day. But in general, right now, we're in this little consolidation pattern, right around that 100-day moving average. I wouldn't be surprised to see us continue to stay in that consolidation pattern next week. But when you come out of these consolidation patterns, oftentimes you can get a very directional move. So be cautious here, because we could get another push to the upside, especially if we continue to get rain throughout the Midwest, causing conditions for wheat to be a little bit, analysts to be concerned about the crop quality of that winter wheat with about 5 weeks of rain now under our belt. Let's look a little at cash basis. You'll notice that cash basis for corn across the U.S. on average was down a penny this week. We did see weakness out of the Gulf. The river market was off 2 cents, but ethanol plants this week were off 3 cents. So that was a bit disappointing. Ethanol was declining that much. We did get a nice big push here higher, a pretty substantial increase in weekly production for ethanol. But we didn't see that reflect anything in terms of demand for corn here from those ethanol plants. Seems as though there's ample supplies of corn out there to meet the needs here of these grain buyers. One thing you'll notice is that southeastern Minnesota, northeastern Iowa, both areas of weakness here for the corn market. Let's take a quick look at soybeans. You'll notice the river was off 5 cents. The Gulf was off this week. A very disappointing week for soybeans. But on average, across the U.S., we were able to move a little bit higher here, up 2 cents on the week. We did also see an improvement by about 2 cents here for crushed facilities. So that is a little bit positive. Looks as though soybean outlook is showing some positive signs. Continues to strengthen here late in the marketing year. Not a lot of beans out there left, but we continue to get export sales. It's going to be interesting to see if we see any improvements along the river here. Export sales continue to be a big story in the weekly reports on Thursday. It's going to be interesting to see if we have any sort of basis improvements along the river in the weeks to come. Guys, let's take a quick look now at the daily corn chart. This is something I want to just quickly go over at the end of the week, just see where we are in terms of the overall chart landscape. You'll notice the trend is down here for corn. It's been that way really since the very end of December. Unfortunately, I think what we're doing here is consolidating for another move lower. We'll have to see whether or not that move happens next week, but it is kind of a range-bound trade here, and unfortunately, there's just not a lot of positive news out there for corn. Just yesterday, we saw Conab out of Brazil increase their corn forecast. For their second crop, they increased their forecast for their first crop. In general, there seems to be ample corn out there, so that's something we're going to have to pay attention to next week. I wouldn't be surprised if we start to make a run at those lows. One thing you'll notice is that soybeans is already through those lows, especially when you look at this November contract. Now, what I did is took this and we're looking at a weekly chart. You'll notice we went down, we cupped over, we touched on these lows. That area was support for about a day or two, but really wasn't able to hang in there. Soybeans now breaking lower here, resuming the downtrend that's really been established and very dominant here since last year. So this is something that we need to pay close attention to. I wouldn't be surprised if we continue to see a move lower. We'll probably test $9. Wouldn't be surprised if we break through $9, just considering the overall position here, where we're at. I mean, we broke through this support level. That was a critical support level. I wouldn't be surprised if we see people start to get in on a momentum trade as we start to move lower. We certainly saw that a little bit here today. Now let's talk about wheat. We've talked about this short covering rally. We're around the 100-day moving average. We tried to make a move at the highs of this week, unable to go up through them. Like I said, we're consolidating around this 100-day moving average, and I wouldn't be surprised if we get a move from this. So either way, whether we go up or whether we go down, I think it'll be relatively directional, and I think we could it could be a sustained price movement. I kind of have the tendency to think that maybe we get additional short covering next week, and I think it's quite possible that we punch out through the highs. But once we get through the highs, I think you're going to want to be cautious there and using those as opportunities to sell. I think one thing that we really want to look at is where we are in terms of this overall trend. And you can tell that we're still in a bearish trend. We still have low lows. We still have lower highs. To me, that means when you get these sort of rallies, you need to be taking advantage of them. If we do get a pop, if we break out of this consolidation, look around at some of the options out there. There could be some put strategies. Call the office. Give us a call. The number's 877-472-4607. We can talk through some selling techniques. We can talk through some option strategies that might be right for your overall marketing plan this year. Other than that, guys, thanks a lot for tuning in. Remember, we do have a shortened trade week next week. Monday, the markets will be closed. We will be back in the office on Tuesday. The markets will open at 7 o'clock Central Time, so make sure you are paying close attention to that. It'll open 7 o'clock Central Time on Monday night for the beginning of the Tuesday session. So thanks a lot for tuning in. Have a safe weekend. We'll see you here on Tuesday.